Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 20th of August. Starting off with the FTSE 100, and you can see that we're in this rising trend channel that's been in place basically since the beginning of May. The resistance line projection there up to 93.45, the support hopefully around the 91.50 level. We don't want to see an end of day close back below that. And what we'd like to see is an end of day close through the 9200 area, which was briefly broken last week. Obviously, the inflation numbers not helping the situation, but actually, given how disastrous they are or were, the market not really down very much, even though we obviously have less of a prospect of more interest rate cuts. On the downside, if we do break down below 91.50, then the initial August support there, 90.27, is the expected port of call. Worst case, I suppose, would be the 50-day line, but as we haven't been below the 50-day line since the end of April, we're not really expecting that to happen at or any time soon. Moving on to the DAX, and here the battle continues, basically in the around that resistance line there from July, which actually is now become rather irrelevant, given that it should have been the feature that the market broke through and then just went straight up again. You could argue that we are finding support at or just below that old resistance line, but this is a sort of minutiae in terms of price action. Really want to see a breakthrough 24,500 to get us to the top of the channel there towards 25,500. We're expecting top of the channel to be hit by the end of next month. On the downside, 50-day line there, 24,000. Worst case would be a rug pull to 23,000. But with the RSI at 55, we're right in the box seat for actually moving up rather than anything else. Moving along to the Dow, and here you can see that it's all about 45,000. We're trading either side of that. Obviously, want to sort of once and for all break of that level to then take us up to 47,500, the top of that May rising trend channel from last year. Rising 50 and 200 day lines, RSI just below 60. So this is in a good place. If there is a rug pull, not expecting anything lower than the 50-day line just below 44,000. Moving on to the cryptos, and it's a tale of two contrasting markets at the moment. Bitcoin has sort of notionally broken down below the floor of that rising trend channel. We have had support so far at the old May resistance around 112,000, and ideally that's the lowest we go ahead of a resumption of the break to the upside. Still looking for the market to head to the top of that channel there as high as 132,000 by the end of next month, but obviously after the latest dip below or towards 112, the likelihood of that slightly less now than it was even a week or so ago. On the downside, the worst we're expecting is around 105, basically the July support zone. Moving on to Ethereum, and after being hailed as one of the best investments that we can have over the next 10 or 15 years, the market decided to fall like 5% or more in the last week, but we have finally found our footing, basically bouncing off the old December resistance. That was one of our scenarios, around 4,100 or just below that. And while we're above that, looking for at least a move to that red resistance line projection around 4,500, hopefully over the next couple of weeks, maybe by the end of this month. If we do break down, the worst we're looking for is around 38 to 3,900, basically the July resistance before the big move higher. On to gold, and here it's been something of a struggle as well, near the floor of that rising trend channel, and here levels are basically around 33.10 and up to 34.20, which is that April resistance line. While we're in that range, really not much to say. We might expect a rug pull as we've had periodically in May, June, etc. So that would be towards 32.20, but that is at the moment the worst case scenario. RSI at 44, so not in a good place. So does leave the door open for a potential dip below 3,300. Moving on to the stocks, and after all the company's been through, it's actually quite good to see the return of chill brands. We see that from a technical perspective, we have some significance here in the sense that we closed back above the 1.5 pence level, which is basically the sort of floor of the gap. Above that, looking for the area of the 50 and 200-day moving averages up to 2p. So if you are a fan of the company, a real stalwart, and maybe you don't mind potentially getting a slap, that is the setup that we have at the moment, above 1.5, looking for 2p plus. On to Contango, where somebody some weeks ago was suggesting that the charting won't work here. So far, what's interesting is that we haven't broken to new lows here at Contango, so zero point 0.8 has held as a floor many times now, so that does suggest we're in a range between that and the post-April resistance and the 200-day line around 1.1p. But obviously, we need to clear that area properly before we can say that Contango is finally on its way. Onto Capex, which is one of the best rises in the recent, has been one of the best rises, rising trend channel there from April. And just to start this week, we've seen new support come at old resistance around 0.4p above that. We're looking for up to 0.59p by the end of next month or even sooner. But 3 RSI bounces at or above neutral 50, so that does suggest there's plenty of positive momentum in the mix there. Onto Cadence, which is also something that's also good to see it back. We've got a proper basing set up here, the first for quite a long time. Obviously, that kind of basing didn't go well in December, where presumably, from memory, there was a fundraise. Fundraises notwithstanding, we look like we're going towards 2.5p on Cadence. Maybe as soon as the end of this month, on the basis that that's the top of a broadening triangle, heading for that level. Next level up would be around the 2.7p, the top of that gap there. So above, basically the moment above the 200-day line at 1.9p, let's call it, looking for up to 2.7 as a best case scenario. Obviously, the company cutting costs on a mapper. On to Enwell, which is only chosen today because it's quite a dull day in terms of movers. Broadening triangle here from November, top of the triangle there, heading for 30p, which we're looking for by the end of next month, while we're above the 200-day line around 19p. But the 50-day line rising as well, so that is a positive at the moment. On to Empire Metals, where we're effectively reiterating the golden scenario here. Here, the top of the channel there from back in March, heading for 45p. We're looking for that by the end of this month. And actually looking for much more once that is achieved, or if that is achieved. Probably a line heading towards wherever that line is going by the end of next month could be on the cards. But at the moment, just looking for 45 while we're above 35. First development only recently came to market, but there's also already a bit of charting to do or to be had. Here you can see that with some imagination, I've drawn a rising trend channel there from the end of July. Top of the channel there heading for 11p, and we're looking for that while we're above above the 50 and 200-day moving average level at 6.5, so above 6.5, looking for 11 in first development, and if that works, that would be quite a creative success. On to Manx Financial, which or whom I interviewed a month or two ago. The shares have been going from strength to strength, not just because of the fantastic interview that was done here. Here you can see that we've got the shares already exceeding the first target there, which was around 24p, and above that we're looking for that October 2022 resistance line projection of 35p, and probably a lot more, but we'll look at that once we've delivered the goods on the upside here. Ideally, we stay on the right side of 29p, which was post the old post 2023 resistance for the shares. Sealand is next, and here the picture is that of tentative recovery. You can see that we've obviously had quite a journey on this one, but second attempt in the recent past at breaking through the 50-day line. Looks like this will be successful. Above the 50-day line, they're looking for up to 0.7p, which is the top of a broadening triangle there. From the end of June, and we're looking for that perhaps as soon as the end of next month. Finishing off with Tower, and here you can see that we've been building well above the 200-day line there, around 0.027. Above that, looking at the top of the range, up to 0.055 by the end of next month, or hopefully a bit sooner than that. I suppose one could just about upgrade that target there to 0.06. That's it for me today. More updates tomorrow.